CBA's interim cash profit of $4.48 billion was down 4.3%, but it was better than expected, and also dividend was surprisingly kept at $2 per share. So the share price jumped 4% and its total value popped above $150 billion. Now, CSL had been about to overtake CBA in market value this week, but today CSL was left behind, even though the big Biotech announced an 11% increase in profit. Other big moves today included IDP Education, which reported a 25% increase in profit, CSL, which increased its salmon profit but was held back by raw prawns, and Blackmores, which slumped after a profit warning because of the coronavirus. Now, just for fun, here's a chart of CSL's and CBA's share prices since they were both privatised in the early 1990s. CSL for $292.4 million, CBA for $8 billion. Now, someone who bought Commonwealth Bank in the float and hung on has had a capital gain of 805%, which isn't horrible, 9.3% per annum compound. CSL, a touch shy of 40,000%. And speaking of coronavirus, UBS economists have predicted that Australian GDP will shrink in this March quarter by 0.1% because of the epidemic. And that's mainly because 37% of our exports go to China, which is easily the highest exposure in the world. New Zealand and Japan also rely on China, but most of the world sends them about 5% of their exports. Consumer sentiment data came out today. It was up a bit this month, but still below average. Interestingly, millennials, usually a cheerful bunch, are miserable. Their consumer sentiment has fallen sharply to a 2.5-year low. Here are commodities. Bulk and base metals up, gold and oil down. Global markets all up, and the dollar is trading slightly higher as well. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.